We're told that the automobiles are, teetering here or teetering there, and obviously taking in their concerns and taking in the concerns of all the stakeholders, and we'll try to get this done in an expeditious way.
But you can't be the president that oversees the collapse of the auto industry in the U.S.
Well, I am obviously have made a decision to make sure the economy doesn't collapse. I've abandoned free market principles to save the free market system. And I think when people review what's taken place in the last 6 months and put it all in one package, they'll realize how significantly we have moved. And I'm so sorry we're having to do it. I'm not real happy about the fact that there have been excesses in the financial markets which are affecting hardworking people and affecting their retirement accounts. Having said that, I'm very confident that with time, the economy will come out and grow and people's wealth will return.
I've abandoned free market principles to save the free market system. So said multi-millionaire George W. Bush, President of the United States, in the middle of December 2008, after the Lehman and AIG collapse, the biggest economic and financial collapse in history. And he actually, along with all the other elite, they got the people to believe that what they were doing was a good thing for the people. Well, the people should be shot for their stupidity and naivety. You do not abandon free market principles to save the free market system, obviously. And yet, that's exactly what they did. This week in history, 2008, middle of September 2008, Lehman Brothers fell 14% on that day, ending the week down 77%, the share price, as the bank scrambles to find a buyer. Well, clearly that didn't happen, did it? And Hank Paulson, the Treasury Secretary, ex-chairman of Goldman Sachs, decided that Lehman's was going to be the scapegoat. Why? Because Lehman's market share in the various banking activities that they did was rising rapidly. And Goldman Sachs could not have a competitor on their heels. So what better than to let the competitor go bust? You think I'm joking? Well, I suggest you read around what went on. Yes, it was 10 years ago, listener, that we had the great financial crash. Welcome to the Booms and Bust Show. Good morning, good evening, good afternoon, wherever and whenever you are. I am recording this at about noon on Monday, the 18th of September 2017. This is now the 25th Booms and Bust Show of the current era, as you might say. And literally hundreds and hundreds of you are downloading the show every week. Thank you very much. Suggesting that you get something from what we do here. What we do is free market capitalism with a libertarian bent. What we do is we show you the falseness of cronyism and the stupidity and absolute nonsense of socialism, which of course is on the same spectrum as cronyism and indeed communism, fascism, Marxism and all the other isms except capitalism. In October of 2008. Look at the pictures attaching to the tweet there. All you do is look at the pinned tweet on the Booms and Bust Show, the Booms Busts Show Twitter account, at Booms Bust Show. You'll see the pinned tweet of the show. Open it up, scroll down. The first picture you see are all the queues outside of Northern Rock. I remember Northern Rock's share price got up to a massive £12 a share, and all the grey hairs who'd been given free shares when the building society demutualised into a commercial bank, they thought they were financial geniuses because they'd done absolutely nothing. Exactly the same with their house prices. They thought they were absolute geniuses because they'd done absolutely nothing. Well, look at them now. Queues outside the Northern Rock. The logic of, quote, the city won't lend to them or buy their stock, but your money is safe, unquote, is proving less than compelling, was the statement we saw in the press at the time. Because that baddie on the news, Robert Piston, with a funny voice, I think the BBC Economics or Newsnight Economics editor, had told people that there were problems at Northern Rock. That was in October of 2007, and of course it was just under a year later that finally Lehman's and the biggest insurance company in the world, AIG, went bust in September of 2008. A few years after all this, I was at a chartered financial planner conference. Listener, I apologise. I don't think I said who I am, in case you're a new listener. I'm Jonathan Davis, and you are listening indeed to the Booms and Bust Show. So I was at a chartered financial planner conference in town, and the people on my table, when we were thinking back to the great financial crash, they all said, to my disgust and I admit my naivety, my amazement, Peston should not have reported what had been going on at Northern Rock. To a man and woman, they all said we should not have been told by this reporter what was going on in the finances of the fifth largest mortgage lender in the country. I was flabbergasted. Even after all I'd seen over the years, from say 2005 to then, I guess it would have been about 2011 or 12, I was still naive as to what professionals think. They're just arch cronists. Whether you're an accountant or a lawyer or a financial advisor, an IFA, you're just a massive crony. You just want to be bailed out by someone else. And the last thing you want is for your house price or your income to fall. To hell with the fact that your kids are having the terrible time that you didn't have. To hell with that. No. You want the guy earning $28,000 a year with a $200,000 mortgage and 3 children in deepest, darkest Yorkshire to bail you out in the south of England. It's so ugly. And considering all these bailouts, I'm now thinking about the literally tens of trillions, tens of thousands of billions of dollars, euros, pounds, whatever, which have been printed electronically by the central bankers and, in essence, handed to the financiers. And George W. Bush wanted everyone to believe that this was going to help the economy. Sure, short term, I don't think there's any doubt that it averted a huge economic collapse. Long term, it put us all into economic depression, generational depression. Now, I'm going to talk later on in the show about whether or not we're likely to be turning Japanese, or are we moving into a superinflationary depression. Last year on the podcast, I interviewed Duncan Weldon, who was actually one of Peston's successors as the economics editor of Newsnight. Indeed, he comes into my mind because I'm having dinner with him this week. And he was on the show, as I say, and this guy's an arch socialist. He's now chief of economics or some nonsense at the Resolution Foundation, which is some massive lefty nonsense funded by some mega millionaire, if not billionaire, who made money in the city, blah, 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 and now basically wants to continue to push Blairite thinking because that's what made him his money. And under the guise, of course, of we want to help do the hell. What they want to do is continue to increase cronyism. So I asked him last year, so, we printed all this money, literally 20, 30, 40 trillion dollars. Now, to put that into context, listener, the size of the UK economy is $2 trillion. I said to him, we're not getting much for it. I mean, the top 1% has done fantastically well. The top 10% has done extremely well. The top 20% has done very well. But the bottom 60% is going nowhere or backwards. And he acknowledges this. In fact, he's the first to point out in all his many papers that people aren't benefiting from it all. So I said to him, so we've done 30 or 40 trillion. How much should we do? 50? 100 trillion? And his answer was very simple. Yes, we haven't done enough. This is how these people think. It doesn't matter. They think that we've borrowed all this money from our children, indeed from our grandchildren. It doesn't matter. It's just frightening. This guy's a PhD in economics and all that nonsense. And he's been trained to think like that. And although his IQ is off the scale, his EQ, his emotional quotient, is at 0. He cannot put 2 and 2 together and make 4. And this is how the city gets away with their nonsense. The city, Wall Street and so on. Because they have people like that who push the nonsense that we need to do more pumping into the system. In case you question what I'm saying here, go on to my company's website, jonathandaviswm.com. Go into the media section, see the featured items there, watch my 11-minute speech that I gave to the Freedom Association Freedom Festival Gala Dinner in March of 2014. Get yourself a coffee and just watch it. If then you still believe that we need to do massive bailouts, QE, zero interest rates, I urge you to stop listening to this program ever again. If we had been talking last week, I would have said today in this day in history, 1956, the IBM 305 Ramak became the first commercial computer to use disk storage on the 13th of September 1956. Why do I mention it? Did communists or socialists, first of all, invent computers? Did they invent disk storage capability? No. Capitalists did. People who wanted to make money out of this brand new technology, which of course in effect came from Alan Turing, who created the massive machine to crack the Enigma code. And look what they did to Alan Turing in the 1950s. The guy almost single-handedly won the Second World War for us. And look what the establishment did to him. This is what we're up against, free market libertarians. Capitalism invented computers. Capitalism made them more powerful, helped them to put men onto the moon. And as most of you will know, the amount of computing power in your smartphone 3 years ago was the same amount of computing power they used in 1969 to put Neil Armstrong and Buzz Aldrin on the moon. And it's in your hand. This is capitalism, folks. Communism has never brought forward the human race, or indeed, therefore, socialism in all of its isms and cronyism. Only free market capitalism has brought forward the human race. Now, last week I mentioned about Nigeria, very hot for investing. Oh my God. And not hot money as in it'll end in 5 seconds. No, Nigeria is a massive, massive long-term investment story. And if you're not entirely comfortable with investing in an individual country, then you can look at funds that invest in frontier markets in general, as I say, Nigeria and the likes of Vietnam and Mexico. Mexico, huge story. My God. There's a very interesting TV series on, I think it's one of the BBC channels at the moment. It's I can't remember the title. It's something to do with the great cities of the world. And 2 weeks ago, I watched the first episode. Very, very interesting look at Mexico City. Absolutely fascinating. Last week was Moscow. I have zero inclination to visit that horrendous fascistic place. I'm very interested to know what city they're doing this week. I mentioned Nigeria as by 2050 it will be the 4th most populous country on the planet. Indeed, in a couple or 3 years, there will be 200 million people in Nigeria. That's pretty astonishing. And I said that by 2050, India will be the most populous, China number 2, perhaps to your surprise. And I couldn't quite work out in my head, I couldn't remember what number 3 was going to be. I thought, I was thinking out loud, I thought it might be Brazil. Perhaps you're wondering, listener, could it be Pakistan or Indonesia? Strangely, it's the United States. And it's maybe not so strange because not so long ago, perhaps not even 20 years ago, I beg pardon, 30 years ago, America had 200 million folk. It's now getting on for 320 million. So that's obviously a 50% rise in a generation. And yes, I can well imagine in another generation, it could possibly double. There could be 500 or 600 million people in America in a generation. This is remarkable, particularly when you consider that China and India at the moment are obviously, as everyone knows, topping 1 billion. I don't know what the numbers will be in a generation, but America's catching up quickly. Isn't that interesting? America, a place for investing. Now, there's a thought. I see in Germany a Syrian Muslim with 4 wives and 23 children is on benefits. No surprise about that last statement. This comes from a German newspaper. If you, again, look to the Twitter, you'll see the article. It's in German. Guess how much he receives in benefits every month? How shall I do this? Okay. Is it 10,000 euros a month? Is it 20,000 euros a month? Or is it 30,000 euros a month? I'll give you 5 seconds. Bing! He gets 30,000 euros a month in benefits. Tell me on what planet that is appropriate. Tell me how many people have to work every month to feed that guy and his family. Don't tell me that it's appropriate in the West to be a polygamist. Don't tell me that that is allowable. And yet, it is. So, if you're a man, you're not allowed to marry a second woman. If you're a woman, you're not allowed to marry a second man. But a Muslim can, by the sound of it, have up to 4 wives in an EU country. The world is just pathetic. Talking of which, Jean-Claude Juncker. Didn't he do well with his speech? EU expansion, extension of Schengen. Everyone in the EU's got to join the euro. There's going to be a euro-wide army. There's no longer going to be, listen to this, individual countries are no longer going to be allowed to veto any EU legislation. And they will bring down the number of EU presidents from 2 to 1. I think they might call him Der Führer. Or her. Do you know what? In pre-EU referendum debates in June of last year, when I said that everyone would have to join the euro, that there would be an EU army, and with regards to end of vetoes, Westminster would become like a county council in terms of power, I was laughed at again and again. And only just over a year later, this is exactly what the EU president is saying he and his cronies want for the EU. I've been doing a lot of other media stuff last couple of weeks. Well, actually, if you look on my website in the media section, you'll see that I always do a lot of media things. But particularly for whatever reason, last week or two, been quite a few. And one of them indeed was to do with this. And I think it was BBC Radio London, and the guy asked me about the negotiations, and I said they're about as useful as a chocolate teapot, live on air, because they are. Reading Boris Johnson, or hearing, I haven't read the article, I have to admit, reading the commentaries about it, which I know is not really what you should do, but I've heard all different angles, so I think I've got a pretty good take on it. It seems to me that Boris Johnson is basically telling David Davis and Theresa May to shape up and stop giving the idea to Barnier and Juncker that we are going to be flexible. It seems to me that Johnson is saying, for goodness sake, we hold all the trump cards here, so let's play them. And of course, I hope that's exactly what happens. It's very interesting because here we are, September 17. We instigated Article 50 in March. So we're 6 months into it, a quarter of the way into the 2-year period. The negotiations over the next 6 months are irrelevant as far as I'm concerned. As I said to the guy on Radio London, at some point there'll be an 11th hour, there'll be a 3-line whip. We'll say, these are our red lines, take it or leave it. And it might even be 5 minutes to midnight, as it were, because apparently we have to have everything agreed by this time next year, because it'll take several months until March 19 for everything to be executed. Myself, actually, I am not that bothered if we have a transition for a couple of years, from 19 to 21. I'm really not that bothered. I would be bothered if it results in, ultimately, Remain. But if it's an extra couple of years of Remain, and then there is finally a cut-off in the foreseeable future, and very likely that's going to be before the 2022 general election, I wouldn't be bothered. I mean, ultimately, who cares if there's an extra couple of years? It's not the end of the world. What matters is that we get Brexit. And remember, listener, remember the jargon. Hard Brexit means Brexit. Soft Brexit means Remain. There is no soft Brexit in Brexit. Now, let's move on to financial matters. Inflation, in terms of things like oil, is upon us. Oil is 7 or 8% higher than this time last year. I noticed suddenly there's been a jump at the pump. It's now, give or take, depending on where you live, about 118, 120 a litre to fill your tank. Do you know what? It was only a year and a half, it was £1. Because the price of oil from February, March 16 to now has doubled. It's actually hovered around 50 plus or minus 5 for about the last 6 months. But the price of oil on the world stage, this is West Texan, not Brent, not interested in Brent, always go by West Texan oil, has gone from $26 a barrel to now over $50. And it's heading up. Nothing goes in a straight line, but it's heading up. Oil, to my simple mind, is the most inflationary input there is. And I've been writing a lot to my clients recently, for the last year and a half, that since a year and a half ago, there has been a great change. The change from deflation to inflation. And I spotted it early last year when I saw the price of oil bottoming and really start to fly. And I saw other things as well. I saw emerging market share prices fly. I saw also commodity prices generally flying. obviously inflationary. And we've seen for the last 2 or 3 years this thing called shrinkflation, where you go to the grocers and you pay the same or more for the same goods that you bought year after year, but you're getting less for your money. The bottles are smaller, the cans are smaller, or indeed the price is higher. And the only question that I had through 2016 and indeed so far through 2017 has been, how sustainable is the inflation, or as they call it, the reflation? Well, I've got news for you, listener. It's increasingly sustainable. And it does make me wonder if all the tens of trillions of money printing is finally feeding through to inflation, which we've heard about is going to come for years, but never came. And then you add on that the global elite have announced that they want inflation. Just look at the likes of Larry Summers and his secular stagnation thesis. They've been saying they're wanting inflation. You've got Trump pushing oil and coal, inflationary. You've got Theresa May and all the cronies saying, we're going to end austerity. Austerity, my backside. Government spending has risen year after year during the so-called austerity years. So, total government spending has risen. Of course, there has been austerity in some sectors of the economy, but there have been massive big rises in other sectors of the economy. So austerity is depending upon where you sit. There has been no overall austerity. And the 1% pay cap in the public sector, which of course is a nonsense anyway. As I said on the Jeremy Vine show on Friday, I was up against this health workers trades union lady saying, oh, the nurses, and I'm pointing out these simple facts. One, in the health service, there's a point system, and every year you get more points, so you get more on top of the 1%. Secondly, everyone's income taxes have fallen. Thirdly, mortgage costs plummeted. Actual net spend by the nurses have gone up. And it was really funny. As I drove away from the studio, I was listening to callers into the show, and 2 nurses phoned in, and they both said, I'm very happy with my pay. Good on you. And good on you, the producers of the Jeremy Vine show, for allowing them on. But I'm increasingly of the view, I'm now putting it at 2-1, that we have seen the end of deflation. We have seen the end of disinflation. And by the way, that disinflation didn't just start in 2009 or 2008 with the crash and then QE and ZIRP, zero interest rate policy. Disinflation, falling inflation, started in 1982. That was the peak in government bond yields, in borrowing rates. In America, the US government then was borrowing at 15% per annum. Of course, they couldn't very much borrow at that interest rate, could they? Over the next 35 years or so, their borrowing rate fell to 2%, and indeed slightly lower last summer. It's been up since then, and it's been down, but currently it's slightly higher than the low point last summer. And this is an issue that I raised last week, and I would suggest to you it is the most important issue that you need to be aware of with regards to your retirement planning. If we have moved from 35 years of falling inflation, falling interest rates, to rising inflation and rising interest rates, what are you going to do with regards to your pension? Because clearly what has worked in the last 35 years isn't going to work in the next 35 years. And if last summer 2016 we saw the secular low in government borrowing rates, government bond yields, and the secular high, therefore, in government bond prices, that therefore means that government bonds, which make up, 10, 20, 30, 40% of your retirement funds, your long-term investment funds, they could be on a long-term downward trajectory. Why would you have 30% of your long-term retirement funds in an asset which is in long-term downward trajectory? Don't make sense to me. We'll be talking about inflation in due course. I see, I don't know if I'll be able to find the chart again. I'm going to try. If it's there in front of you, then I found it. If it's not, then I didn't find it. But I see that German house prices have absolutely gone through the roof. And I'm not really surprised about this, because I remember visiting Berlin in the autumn of 2010, the capital city of the most important country in the EU. Okay? Taking away Britain / London from that. And, we'd walk around the city. Guess how many estate agents' offices we saw? Do you think we saw 100? Do you think we saw 10? I'll tell you, we saw 1. In the space of 5 days in Berlin, we saw 1 estate agents. So why does that make me not be surprised that house prices have soared? Because when an asset is so beaten down and no one's interested, that's when the smart money is going to come in. And then I heard as well that they're doing massive building around the southwest, I think it was, of Berlin. They're making a super airport out of the 3 Berlin airports. And you can just imagine the house prices, what they were going to do in the southwest of Berlin. Berlin has gone up even more than the national average for Germany. Very interesting story. 1 estate. Imagine if you walked around London, how many estate agents you'd see. Exactly. So you think we have capitalism? The Bank of Japan now owns 75% of Japanese exchange traded funds, which are funds that invest in various assets. The Bank of Japan has printed money out of thin air, and it owns 3/4 of the Japanese investment market. Think about that. The Swiss National Bank has printed money and now owns $85 billion of US stocks. So, a central bank has created money out of thin air and bought real assets from money created out of thin air. And the European Central Bank is in effect funding mergers and acquisitions at a 0% yield. In other words, you can effectively borrow money from the ECB at 0% cost and go and buy a company. You think we have capitalism? You almost couldn't get further from it. Hey, have you subscribed to the Booms and Busts report? If you haven't, all you have to do is send me an email at jd@theboomsandbustsshow.com, jd@theboomsandbustsshow.com, and I will put you on the list. You'll never be junk mailed. Your email address will never leave this office. Have you heard that we want to launch the Booms and Busts Club? Initially in Hartford, about 15-20 miles north of London, because that's where I am based, where we'll just have a meeting group and we'll discuss all these issues over a beer, maybe the likes of a curry. Just message me or direct message me at Booms Bus Show, and when we've got enough interested parties, then we'll start arranging a date and venue. It won't cost anything. It's just like-minded people getting together to discuss these issues. Because let's face it, where else can you talk about this stuff and not be looked at as if you are out of your trolley? Exactly. So the market now puts it at a 61% probability that the Bank of England will raise the interest rate at their November 17 meeting. And that was the market expectation on the 14th of September. So what's that? Thursday. On the 13th of September, it was a 39% probability. Why the jump? Because of what the Monetary Policy Committee were spewing out. Comments coming from Carney and others on the MPC, or Carnage as I call him. They're doing exactly the same as the Bank of Canada, as the Federal Reserve. They're talking about normalising the central banking system, which means normalising interest rates, normalising the balance sheet. In other words, they've had quantitative easing, which means printing masses of money, putting it into the financial system, giving it to the top 1%. In other words, they're now talking about quantitative tightening, QT. If we had deflation, disinflation with QE and ZIRP, what will we have with QT and normalising rising interest rates? Well, it seems logical that we'll have the opposite to disinflation. We'll have rising inflation, or as they call it, reflation. And this is what people aren't getting. Some of you are saying, but they can't raise interest rates. The economy can't handle it. So that'll be the reason why the Fed has already raised 4 times from 0 to 1%. And they're talking about doing more, and they probably will. You know, every time they're about to raise, people, including myself, said, oh, come on. They've cried wolf before. They haven't done it. This time they're actually doing it. How long will it be before you skeptics, you consensus thinkers, get round to realising that what they said they will do, they are doing? The ECB and the Japanese central bank, they are materially less talking about normalising, but I tell you, the market smells it. There is no question about that. So the global elite want inflation. They'll get inflation by ending the austerity in the public sector. They'll get inflation, listen to this, by, to some degree, raising interest rates. Huh? How'd you get inflation by raising interest rates? Because zero interest rates are deflationary. It stops savers getting money in their pocket. You put interest in their pocket, they'll spend it. They stopped spending because of ZIRP. They will start spending again because of rising rates. They'll feel more comfortable because they'll be earning more. First of all, because of the interest rates. Secondly, those who are working will be earning more. We will have inflation. People will spend it. That will create a virtuous spiral, quote unquote, of rising inflation. Now, you and I both know inflation is a killer, because behind it, as I say, we are having rising interest rates. It will be a killer eventually, but eventually is the operative word. Your retirement funds need action now. How else are we seeing inflation? Do you know what? The Chinese yuan is probably, after the dollar, it's got to be, in my mind, the most inflationary or deflationary currency in the world. The yuan fell for years and years and years. Thus, it cost us in the West less and less to buy stuff from China. We're still buying stuff, but the yuan has been rising dramatically since the beginning of the year. It's up 10 or 15%. This is a very important currency, and it's up 10 or 15%. That's a dramatic rise. Thus, it's costing us more and more to buy stuff from China. This is inflationary. We've seen emerging market share prices soar in the last year and a half. Frontier markets soar. Commodities soar. We're seeing the price of inflation-linked government bonds rising relative to nominal government bonds. Look up TIP versus TLT. Government bond inflation index versus government bond nominal. There is weakness in TLT, which is the main exchange traded fund for nominal government bonds. There is weakness after having risen for basically ever. And then we see stock markets breaking out big time. Look at the chart of the FTSE. There is a 20-year chart, and it shows that the FTSE got up to about 6,800 in 1999. In 2007, it practically got there in 2013, in 2015, in 2016, and look at what it did in late 2016. It broke up above a 20-year resistance. This is just about the most important chart in share markets globally. Now, clearly we're hovering around 7.5. If we see a breakup above 7.5, then I tell you, we're probably going to see a secular rise in stocks and shares. And so long as the FTSE stays above about 7,100, which is clearly support and also its prior resistance of 2015, its support as of earlier this year. So while we stay above 7,100, you have to be bullish the FTSE, and therefore you have to be bullish global stock markets. Gold, I've been bearish. It's fallen now from 1360 a couple of weeks ago to, what is it right now? Let me just check. Give me 1 second. As we speak, it's 1312. So it's come down a bit, and you know what? It's going to come down a bit more. The dollar is strengthening, particularly against the Japanese yen.
all you have to do is look at a chart of the Japanese yen compared to the US dollar, overlay gold, and you will see that they move hand in glove. And the dollar has risen materially in just over a week from the 107s yen against the dollar to currently 111.5 against the dollar. That's just in over a week. And not surprisingly, there's an inverse. As the dollar rises against the yen, gold, silver, gold miners fall. There's more to come in the dollar yen. So there's more to come down in gold and associated. And this is exactly what I've been saying for weeks. Looking at the charts, I'll try and put up a gold chart for you. Looking at the charts, it could be that circa 1250, which clearly is 60 odd dollars from now, it could be that 1250 is the trampoline point where gold does a massive bounce. I'll tell you what, if however for whatever reason gold breaks 1250, then it's going down to 1200 and maybe 1180. But I'm seeing if we get down under 1300, then we're very likely going to 1250, and 1300 is only $11 or $12 from where we are right now. So I hope you've enjoyed the show. Of course, as usual, I've got a couple of quotes of the week to finish off. Please spread the word about this show. Please spread the word about the Twitter account. There just aren't enough people following on Twitter, and I don't understand that. Twitter is amazing. I've got over 3,000 followers on my own personal stroke business Twitter account. Oh, actually, that's the point I wanted to make. On that account, which is Jonathan Davis, where the O is a 0, my pinned tweet there is the Emerging Markets Fund from Franklin Templeton. I've been following it for years, and I started tweeting a chart of that fund in March of this year when it was significantly lower than what it is now. And I've done various tweets over the months. Just last week, I think was the last one, and I've been saying that this looks as if it's got such a long way to go. And sure enough, it just keeps on rising. If emerging markets are doing well, then I tell you, there's inflation in the world. And behind that, frontier markets, as someone said recently, you've got the worst companies in the world in the worst stock markets in the world, quote unquote. I mean, quote as in worst, quote unquote. And this is frontier markets. And they're doing really, really well. There is global reflation, folks. Get used to it. And I've been showing that in my Twitter feed for many, many months, and particularly in emerging markets for about the last 6 months. If you haven't followed me in what I've been saying on investing, then you've lost a lot of opportunity to make money. So, it's crazy that I've got over 3,000 followers there, and I've got under 300 followers at Booms Bust Show. Please tell people about the Booms Bust Show Twitter account. Quotes of the week come from the ladies this week, and I want to thank Austin Swith for putting forward this one as a candidate for Quote of the Week. Couldn't agree with you more, particularly because we reflected on 9/11 in last week's show. Margaret Thatcher, after 9/11. We have harboured those who hated us, tolerated those who threatened us, and indulged those who weakened us. If only we could bring back Maggie. And arguably the greatest capitalist thinker in the history of the world, Ayn Rand. Capitalism is the only system that can make freedom, individuality, and the pursuit of values possible in practice. And she, of course, wrote the enormous tome, the enormous work, Atlas Shrugged. I've never read it. I don't have the time, but I know what it's about. And if you do have the time, read Atlas Shrugged, and you'll understand the free market spirit against the cronyist system. And I haven't even scratched the surface there as to what it's about. Listener, I've enjoyed doing this show. I've had a blast. Thank you so much for listening. Have a great week. I'll see you next week.